Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice to give you the market recap video from Monday, March 14th, 2016. And quite frankly, not a whole lot to report on here. There just hasn't been that much go on in the market today. It really ended kind of flat, Dow up a little bit, S&P 500 down a little bit, NASDAQ flat. I mean, the entire marketplace was flat today, and that's kind of to be expected. A couple things. Number one, we didn't have any major economic reports today that we needed to be concerned about. But number two, you got a huge economic situation this week with monetary policy coming out of the Fed. And although it is not expected that the Fed is going to do anything, I literally think the Chicago Mercantile Exchange probability is around 96.5% that the Fed keeps the rate at 0.25 to 0.50 with a 3% chance that they decrease the rate, which would be utterly shocking to me. I certainly don't expect that. But there's no reason to get in front of the Fed. Even though they're not expected to raise rates, the market's been on a little bit of a tear the last 15, 20 days. It's came off the lows. As you can see here at around 1820, currently up around 2000 at 2009 points. You're at a resistance point, and so a lot of the market's feeling pretty good about things with this recent uptick in the price. And it's almost to the point where it's like, well, let's not fight anything right now. We got a big economic week this week. We got retail sales and PPI report coming out tomorrow. We got the building permits, CPI report, and the FOMC on Wednesday. You got the Philadelphia Fed manufacturing on Thursday, and you got consumer sentiment on Friday. So let's take a holiday. That's basically what the market is doing today, and you saw that in the price action. A little bit of a downward movement in price early on in the market, a fade back up into resistance towards the tail end of the market. But really, if you look at the S&P 500 on the spiders instead of the ES contract, you basically have the worst volume day in the market this year. It only rivals back into here when you were dealing with the Christmas holiday season, which is always at a decrease in volume, and real back here over the Thanksgiving holiday season. So we didn't have a holiday season today. And you're looking at very low volume in the marketplace, given the fact that nobody really wants to take a strong move one way or the other on the marketplace. It's upwards. We haven't saw a retracement since really the lows of February. And if you go back to it, it really reminds me of this movement back up that we had last October coming into November. After the drop in August. So if you look at it, you got this huge drop in August, you double bottom, and then you went on this ridiculous run back up into resistance before you double topped again. And then in early January this year, you'll have this big drop again, very similar to what you had last August, a little double bottom here, and now you're running up in a ridiculous run up yet again. So coming into this, we're at the highs. There's no real reason to buy going into the Fed, and it's almost like, the market believes, well, is the Fed really going to raise rates when the Europeans are going into negative rates, when the Japanese are at negative rates, when everybody around the world is at negative rates? So nobody in the world believes that there's any chance the Fed raises rates on Wednesday. I don't want to say no chance, but I'm with that. I don't see the Fed doing anything. I see them really kind of standing pat. However, what I'm looking forward to on Wednesday is if they give us some indication, a little clearer picture on what they plan on doing with the interest rates in the future for the rest of 2016. And I think that's what the rest of the market is waiting for. And so there's no real activity. Expect a little bit of movement tomorrow, but really kind of waiting coming into that Wednesday Fed meeting is from the market. So the S&P 500, if you're looking at it, it is in a short-term bullish intermediate neutrality right now. I think some type of zero bias in the market, a neutral bias, given the fact that we are overextended and at resistance, especially on if you're looking at the futures, which is typically what I do look at. You're kind of sitting at this same resistance support level, 2000. You're right above that. So I think because we've had this extended movement to the upside, because we have a still downward movements in price. From a longer term perspective, I think a neutral bias in the market this week is preferable. Although I will tell you that I'm looking to enter into some short stocks through put options with confirmation if we do get any downward movement in price, because most stocks at this point are very, very overextended. For example, if you're looking at McDonald's here, McDonald's nice little run up, overextended, sitting at resistance. And you've seen that in a lot of stocks that recently overextended, sitting at resistance. And a lot of times those like to come back down in price before they make another run at. On to the dollar today. The dollar today rebounding off support at $96, looking for an upward movement in price. Last week I gave a little bit of an indication that short-term bearish intermediate, short-term bullish intermediate bearish here. You can see this downward movement in prices. This is all back in the ECB from last week announcing negative interest rates. Initially the currency went south, as it should. If you look at EUR/US dollar, tremendous movement, as you can see. We're going to drop this down into a 30-minute chart, and you're going to see the initial 30 minutes was exactly what was expected. But then, for some unknown reason, it just rebounded and it just drove upward movement in price, and it created just a tremendous amount of volatility in the marketplace. And you can kind of see that play out here on the euro dollar. But coming back to the dollar index, initial up, downward movement in price, comes back down into 96. This is a stay away for me in almost every accord right now. Very volatile, very random on the dollar index. And like I said, you got a whole bunch of neutrality, a whole bunch of bearish, and a whole bunch of bullish reasons to do something, which is typically stay completely away of everything. On the crude oil today, crude oil, let's drop this down into, there we go. Crude oil today, a little bit of a downward movement of price. Not, when you're looking at crude today, and if we're kind of just looking at right here, crude kind of starts right here about 38.48, ends the day at about 37.47, down about 3% on the day, and that's going to lead the headlines. But if you're looking at it on chart, that's the average movement in crude. And the average movement in crude is like 3.5–4%. It's like a lot of other things that are overextended, sitting at resistance levels. I think a lot of people in the market were just given an opportunity to lock in profit in crude. I do not see this changing the overall short-term trend. I saw some headlines out there that said maybe people were locking in profit because the current fundamentals of crude don't justify the price. Maybe, maybe not, but a 3% movement in crude is the average daily movement in crude. So I don't think there's anything to those headlines, and this is forming a little bit of a high base type situation where crude has ran up fairly consistently, and either one or two things is going to happen. Number one, it could retrace back down into the 34 area, which is a little bit of a short-term high base over here of resistance. That would not surprise me in any capacity. Or two, it kind of just hovers. It just bases right around $36 to $38.50, and then perhaps it wants to run again. Nothing in crude is going to shock me. I'm still an owner in USO, and I'm looking to buy more shares, to continually write covered calls against that as well. So crude oil, I'm looking at short-term bullish, intermediate, neutral, overextended at resistance. Let's look at your commodities in silver. Silver has neutrality written all over it after a very, very, very good run. Let's look at gold. Gold overextended. I'm expecting a little bit of a pullback in gold, and the VIX at 16.92. Options are priced to sell right now. Not a lot of volatility in the S&P 500 itself. We're still above 15 on the VIX. If we get below 15 on the VIX, maybe that's an opportunity for those of you that need to buy insurance on your portfolio to perhaps buy that insurance on the portfolio. Also, last in the news for those of you who travel, Starwood Properties was having a buyout from Marriott. However, they do have some degree of competition now, as China's Ambang Insurance Group offered to buy Starwood hotels, resorts worldwide for about $13 billion. It's going to be interesting to see what happens. Starwood responded, gapping up by about 7.5% today. So if any of you invest in Starwoods, I do not. There is some degree of positive news on Starwood properties with a massive increase in volume on that as well. This is Matt Justice. We are Tackle Trading, getting the game one trade at a time over at www.tackletrading.com. And if volume is and the Fed is something that you want to learn a little bit more about, Tim and myself will be having a Trading Justice podcast tomorrow where we talk about the Fed interest rates coming in on Wednesday specifically, how volume impacts different patterns in the market, and we have a new segment on the podcast called Crook of the Week, which we'll discuss tomorrow. We're out.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.